Hi, welcome to the Market Alert for Friday, the 1st of July 2016. So yesterday we see the market in the pre-market session more or less stuck in a sideways range, the volatility dropping off there a bit. And also in the start of the session, the opening price bars were not as wide as they have been for the last few days as well. So the volatility dropping off a bit. See the market moving lower, and this first trade resulted in a 40-point loss. And then the market turned around, took out the stop, and then gave a buy signal to the upside, which resulted in just 22 points. Then we went into the quieter part of the session, but the market continued to move higher, then turned sideways for a good hour as the market waited for the FOMC member Bullard, a high-impact news item, to actually speak. And there you can see as soon as he finished speaking, the market moved back down and then moved back up. And then before the close, we had another sell signal there. So 3 losing trades yesterday and only 1 winning trade had you taken them all. I wasn't at my desk for the first part of the session as I was attending a funeral, but the second part of the session I was listening to Bullard on Bloomberg. And again, the usual rhetoric of trying to say that everything's fine with the economy and pumping the markets to the upside there. But of course, the market having already moved 150 points then pulled back. And then we see the market running out of steam thereafter, not really believing. And you see how sideways the market's been on the overnight there. In the daily chart, so you've got the market again trying to move back to the upside, heading back to the pre-Brexit vote there. Let me just grab this. If we go from the high down to the low and draw the Fibonacci retracements on there, the next upside target is going to be the high of a week ago, Friday's high. Let me just move that one out of the way. So we're looking for the 18,117 for this market to trade back to there. So the market recovering quite well, and in fact, if we just jump across to the FTSE, you can see there that this has recovered completely and above the highs of last Friday's Brexit vote as well. Even though the market recovered 50% on the day, it's gone on to move higher. The pound, on the other hand, is still stuck in a sideways range following last Friday's drop, but nonetheless still holding quite nicely there. The star performers are silver and gold because of the uncertainty in the globe now, and with the global slowdown and what I believe to be a systemic failure of Deutsche Bank, the Italian banks, and a few others, Portuguese bonds as well, then we're going to see a bigger move into the gold and the silver markets as well. And news-wise, what have we got? Let's just have a quick look. There's only one news item today, and that's going to be the manufacturing, I think. Yeah, that's out at 3 p.m. US manufacturing PMI is out at 3 p.m. On the implied volatility front, 12.13, this dropping off nicely. If we can get this back down to 10% before we start to see the fall off of all of the Portuguese bonds and the bank bailouts and so on, and even better, then we'll see a resumption to the downside. Speaking of which, this is making the headlines at the moment. Is Europe in trouble again? Hints of Portuguese, Italian bank bailouts suggest not all is well. And this is what I keep saying in a video I recorded the other day, put out on social media about the Italian banks and the problems that they actually have. Again, nothing to do with Brexit. This is something that's gone on for a long time. Italy granted extraordinary 150 billion euros bank bailout program to prevent panic run on deposits. So all is not well, and as I've said to a lot of people, the European zone is a financial basket case that is going to fall apart naturally anyway because of the failure of banks and also the bond markets and the continuation of printing money out there. We're up to 9.7 trillion with just under 900 billion a year now being printed, or 60 billion a month, to buy back debt and also corporate debt, and that means company debt for the layperson. They're buying company debt to keep companies in business as well, just to give the illusion that all is well out in the European Union. This is not scaremongering. You can go and have a look. These are the facts. The scaremongering I leave to the mainstream to do, and blaming everything on Friday's vote, when all of this has been here in the background bubbling away for the last 5-10 years. It's never been a rosy picture, and we all remember what happened to Greece 2 years ago, and again, watch this space. That's what we'll be making the news again shortly, needing more money to keep it going. So on that cheery note, but it's unfortunately is the case, that's it for today. I will see you in Monday's Market Alert, reporting if there is anything to report in about. Other than that, have a great day, and as ever, thanks for watching. See you in the next one.